So you have shifted your allocation now to more mining stocks. Are they all gold and silver mining stocks? Can you, without going into detail, Peter, can you tell us about some of the other sectors that you like?
Well, after that, in late 2019 and early 2020, I became something for the first time I never was in my then 36-year career. And I've been coined the uranium bug because I became so deeply convinced and in fact stated many, many times over several months that I believe the coming bull market in it will be the best bull market I ever experienced in close to 37 years now in the business. So I got very, very involved in uranium. Now I focused more on the producer side than those who like the junior resource side. But we're witnessing now, as we speak, the coming of that bull market. We're way off the lows. People are starting to recognize that the tying into my next investment theme, that there is going to be a need for more power and it needs to be clean and what have you. Nuclear is going to play a big role. And that's why I think we've just started to see the shares go without even seeing the uranium price itself go. And when that kicks in, which I don't think is too far from now, we're really going to see a move. I'm going to stay overweighted on the producers because of conservativeness and wanting to take less risk. But I think most of the things that have uranium will rise. And so I pretty well have made my bets in that market. And now I'm watching them fulfill, hopefully, my goals. And now the third investment theme that I've come to, and that is the coming electrification of the world and what that's going to mean and why I've gotten very involved in things like copper at the moment and looking at other avenues to invest in.
Mm-hmm. Let's talk about nuclear first, and we'll get into the EV story. So currently, according to the EIA, in 2019, nuclear power accounted for 20% of electricity generation in the U.S. Do you anticipate this number to increase?
Well, it's definitely going to increase in the U.S., but even so much more around the world. And everywhere we look now, people are talking about, this carbon free, and yet everybody wants to have all these gadgets, all these electrical cars that are going to exist and all. We're witnessing now here in the U.S. that a lot of people that went to the wind power and wind tower, they can't operate because they froze up and things of that nature. So I just think there's a lot of reasons to suspect that nuclear energy, barring a very unfortunate accident again, is going to grow as a need to fill all this increased power needs. And there's so few, you can literally count on both hands the major producers in the world. And, obviously I will mention, because I think it's the bellwether, is Cameco. And that's certainly my largest uranium holding. But I really think that market still it's only in this, maybe the second inning of at least a 9-inning game.
That was my next question, is how you would actually, as an investor, play the uranium market. It's not a market that everybody is familiar with. So you mentioned a company. Would you consider an ETF? I know that I'm looking at one, the URA as a uranium ETF. So
you're right, David. The safer bet is, because they'll get more diversification, and Cameco is a key player in those couple of ETFs that are out there. There are a lot of juniors, and like I said, they'll rise. But when the utilities come around and recognize that they have to assure themselves of future uranium, they're not going to go and run to a company that maybe 7 or 10 years from now may eventually have a mine. They're going to want to be certain of supply. And that's why the Camecos of the world, I think, are just going to, do phenomenally well. So I personally want to error with producers, but you're right. I think the safer bet for most investors is the ETFs.
So Peter, you're now invested in the electrification of the world. That includes not only electric vehicles, but also renewable energy generation like wind power and solar power. But don't you think that these power generation sources could compete with your nuclear investments?
I don't think it'd be so much as compete. I think they'll all be part of the program in order to get us to meet the needs of this electrification. But one of the things I think is really critical is the fact that copper is the main component and the most useful metal in order to get electricity from one place to another. So I would first argue that the copper end of it is a better play before I start looking at wind and solar. But they all are going to make up and need it for what's transpiring. And it's kind of exciting to know that, because as your guest that's been on has said, it's not yet something that's in the investment domain, just as uranium wasn't in the investment domain a year or so ago. And only in the last few weeks have we started to see news stories of various people saying, hey, it's time to be involved. And I think we're going to get to that on the electrification end. And of course, you invest on the basis of hoping that something's going to happen, not wait till it happens, because then you can never buy it at what you see it at price now.
Okay, and and you said copper is your preferred play for the electrification angle.
Yeah, no question about it. And there, as has been pointed out, it's going to be very, very difficult to find the high grade copper that's going to be needed to make mines profitable, and for companies to go and spend hundreds of millions, if not billions of dollars to develop it. And so I think the few key copper projects that are out there, I think where you look is going to be critical. I think that's the same for gold and silver. It's become very difficult to be a miner, period, in many parts of the world. And I think we're going to find ourselves back in North America again, Canada and some parts of the U.S., not only for gold and silver, but also for copper. And, places like Arizona, I've invested quite heavily in a little junior called Arizona Metals. But no matter what, I think it's going to be important where they're looking for it as much as what they're looking for.
Peter, I want to go back to the gold versus S&P chart one more time. Now, it's true that over the last 20 years, gold has outperformed the S&P according to the chart. But suppose you remove gold and overlay with crypto. Well, Bitcoin has really outperformed the S&P 500 over the last, well, not 20 years. It's been around only since 2010. But just since 2010, it's really outperformed the equity. So what is your view on cryptocurrencies? Have you looked at it as an asset class? Have you considered it seriously?
Well, I've taken the Switzerland approach, because if you aren't a roaring bull, or worse yet, you make a comment that may even be negative, a cult-like group comes after you. And I truly have been. It is not something I felt that I had an expertise in. It's probably one of the main reasons I didn't get involved in it. I congratulate those who have. It's been a wonderful performer. One of the things I learned after 37 years, Dave, is it's an attitude of what have you done for me lately? So with Bitcoin at 50,000 now, copper, and gold where it's at, if you took my child and said, even though she's grown, and said the only way you get it back, which one outperforms over the next 12 or 24 months, at the risk of being attacked by the cult, I would take the copper and the gold. Doesn't mean Bitcoin can't still go up, and cryptocurrencies are definitely here to stay. But the one shoe that hasn't fallen yet, that if I am a bullish cryptocurrency person, that I would be at least mindful of, and that is regulatory. We're starting to see in recent weeks and months several regulatory people starting to talk about Bitcoin in a negative way. And that's its last hurdle to get over. And is there a shoe going to drop to where they get to the point of saying, no, we need to basically hurt Bitcoin in order to do whatever their own plans are? I think that's the last hurdle. And so if you have these huge gains that many people have and haven't taken them any, if I may say this, and if it's not good, you can cut it out, but there's an old saying that I think is appropriate for Bitcoin holders now. Hey, listen, there's bulls, bears, and pigs. They each have their days, but eventually the pigs go to the slaughterhouse. And I've seen too many people have huge gains and never take them and regret it more times than not. And that would be my only caution that I would have for Bitcoin shareholders.
You have a wealth of wisdom for investing, so it would be foolhardy not to at least consider what you're saying. Finally, so for the final segment, I'd like to just sort of generally get your take on investing, so to speak. What is Peter Grandich's philosophy on investing? What has made you successful over the last 37 years of your career? And if a young investor were to enter the space, somebody in his 20s, perhaps early 30s, and he has a little bit of money to invest. I get these questions from my friends all the time, people in their 20s asking me, David, I just got some money from my work or from an inheritance. What do I do with it? What would you advise them to do?
Well, after 37 years and losing more money over those time than I ever imagined as a young man in his 20s at one time that I could have, I would tell you that for me, it took serious loss, serious battles with depression, to the point where I realized that money wasn't going to be the answer or my God, which it once was. So the first thing I would just tell them is you have to make a decision on what's more important in your life, a few extra dollars or peace of mind. There are a lot of people with a lot of money, but still have a lot of problems. So money doesn't necessarily mean all your answers are going to be answered by having more of it. Having said that, I think people need to understand that these are very, very matured markets. You could argue that it can be sustained because the Fed's going to keep printing money or stimulus bills, what have you. But it's hard to argue that general equities or bonds, for that matter, are undervalued or fairly valued. Can they overvalue and just continue going on? So I would just tell them that don't think that everything is a boat, which means if you don't get on, you've missed the boat. No, there's no boats in investing. They're ferries. When one ferry sails, another one will come in. So I would just err on the side of caution right now. And I would try to be an expert more than 6 months or, before I think I know everything. And experience is the best teacher. And the best line that I can say, and it wasn't for me, it was from my mentor way back named Kennedy Gambich. He used to say, once is an experience, twice is a mistake. But many times in the markets, you don't get a chance to make a mistake. Mm-hmm. So again, I think I would err on the side of caution at this point.
Well, how can a new investor educate himself? Not everybody has a background in business or finance, but they're still interested in investing.
One of the things is learning. You have demonstrated, and listen, I don't have to brown nose you. You know that. If I never was on again, I'm grateful to be here, but I won't lose sleep. But watching a program like this that demonstrates having numerous people, that a guy, even me, that's been 37 years and can basically handle his own investments, still watches a program like yours, that's a teaching point. And I think they need to identify more teaching points like yours and follow it for a while before they go out and go crazy. And many times, in a sense, paper trade. Okay, this is what I would do if I had my money today, and see how it develops. If you're in your 20s, you have a lot of time left. Don't feel like time is an essence. And I just think, like I said, and the biggest line I like to leave people is, remember, the ultimate crime in investing is never being wrong. You might not think when you watch some of the financial networkers, any of those people have been wrong, but trust me, I've been wrong and so have they.
Yeah.
It's staying wrong. That's the big tough. The biggest separation from winners and losers is people always complain, Dave, hey, you guys always tell us when to buy, you never tell us when to sell. I'll give you that advice. You start thinking about selling when you couldn't first buy it today at today's prices. And if you can't buy it at today's prices, then you have to ask yourself, why am I staying in this investment vehicle?
All right. So final question for you, Peter. You said you've made a lot of mistakes over your career. Well, everybody has. What's one mistake you've made that you wish you hadn't? What's one thing that you've learned from that mistake?
There's too many to imagine that, but I think it comes to, there's an old saying Mark Twain said that you never have to worry what you said if you always tell the truth. The moment you feel somebody hasn't been truthful to you, you need to put up a big flashing yellow sign. And it's very hard to find truth in a world full of people caught up in what it is today. And when you can find someone as valuable as I've told you off the air, a few of your guests to me, even after all my experience, it become very valuable to listen to. Cherish that and soak all of it in that you can, because that is a gift from God.
All right. Peter, well, thank you very much for coming on and imparting your wisdom. You're welcome to come back anytime, and I look forward to more of your updates.